Hi, I'm Dom from money.co.uk, and today I'm just going to go through some basics on what an ISA is and the different types you can choose. Now, an ISA stands for Individual Savings Account, so what that means is that you yourself can open up an ISA. You can't have it as a joint account, for example, and what that means is you actually have an individual savings account allowance. Now, this tax year, which ends on the 5th of April, means you've got up to £20,000 to save into an ISA, and you can earn tax-free interest. Now, there are three different types of ISA you can look for. There's a cash ISA, which you typically find in most high street banks or online. Now, the second option is a stocks and shares ISA. Now, that's an investment which you make tax efficient using your ISA allowance. Now, there's going to be risk when you put your money into a stocks and shares ISA. If you're not comfortable with any kind of risk on your money, then a stocks and shares ISA may not be suitable for you. But if you are interested, but you kind of need a little bit more information, you can seek independent advice before you invest as well. And there's also a third type of ISA called an innovative finance ISA. Now, that's kind of a halfway house between a cash ISA and a stocks and shares ISA, whereas there's going to be some risk because you actually put your money into an account which is then distributed to businesses and different types of people who are looking for money, kind of like a loan. They pay that money back and they pay interest, which is then brought back to you. You don't actually need to choose just one of them. You can actually spread your ISA allowance over all three types if you wanted to. There's no obligation to say that you need to do that, but if you were tempted to have a go at one or the other, it's completely down to you. Now, if you haven't paid any money into an ISA this tax year, like I said, the deadline is looming. It's going to be on the 5th of April. Just bear in mind that away from a cash ISA, there's going to be an element of risk to your capital. So just be a bit cautious, and if you're not quite sure if it's the right fit for you, do seek some independent advice as well.